Well, we've got a very special voice joining in just a few moments from now. But in the meantime, let's get you a big ET Now exclusive. A small section of shareholders of Raymond are concerned regarding the royalty arrangement which the demerged entity will pay the parent, Raymond Limited, on the execution of the demerger, which has just recently been announced. So let's bring on board my colleague Ajaya Sharma, who joins in with all the exclusive details on what the royalty pact is with the demerged firm and the impact. Ajay.
Well, that's correct. Awan, we all know that the Raymond stock has rallied quite smartly in the last 1 month on demerger excitement in the market. But there is one element of the demerger which is keeping a lot of shareholders slightly nervous, and that is the arrangement of royalty payment from demerged business, the new company, Arvind Lifestyle, which houses the lifestyle business, for the old co, which is the Raymond Limited, the main owner of the Raymond brand. There was a lot of queries from large shareholders regarding this. How much will be the, Raymond will be paying out royalty to the main company, and there was a lot of nervousness. How much of earnings will be retained in lifestyle business, and management is also still in discussion about it. We are exclusively gathering that Raymond management is very cognizant of the fact that only a reasonable amount is paid by the lifestyle business to the parent company. We are understanding that it will be capped at 25 crores per year, and the management board is in discussion right now, along with the large shareholders, that this is reasonable and this is not unjustified, and the earnings of lifestyle are fully paid to the parent company. So that's the big exclusive. In fact, I did speak about it with the chairman of the company, Mr. Gautam Singhania, as well, and he assured the shareholders that it will be a reasonable amount and not an unjustified one.
I have stated repeatedly in my several interviews in the past that we want to create shareholder value. And this is in line with that. Now, to come to where we have come today, there has been a series of things that had to happen. And one of them had to be a trigger. So two things really had to happen. A trigger of a land demonetization in this case, of getting some funds in so we could reduce debt. And number two, if we had to do the demerger, we needed the old co. I'm going to call it old co, new co, so it's easier to understand. The old co would need a business to sustain itself. And over the last 12 months, you've seen the real estate come into itself. So you'll have two separate businesses with two separate revenue streams. Combined with the debt reduction, has really made the demerger possible. It's something, honestly, we have been thinking about for 5 or 6 years. And even the land monetization process has taken its time.
Sure.
But sometimes things take their own time.
Yes.
No matter what. And what we couldn't do in a very good market, we actually did in a very bad market. So there's the irony in the whole thing.
That's correct. I mean, land monetization itself, several years people were looking forward to it. Then finally it happened. And then now you've given a dollop of value addition by this demerger. Let's talk about the lifestyle business first. The latest data shows it did a EBITDA of about 600 crore. How's the growth profile of this business? How's the margin profile looking? And in the environment, what's road ahead for this business?
So let's philosophically look at what we're trying to do. The lifestyle business has had quarter-on-quarter growth. Okay, this last quarter has been challenging, which has been challenging for everybody. But philosophically, what are we doing? We're spinning the lifestyle business off into a separate company that will have a whole your textile, apparel, everything. We're putting the right governance into place, the right focus. We're giving you the right ROC in that business. The ROC in that business is already 18%. It will go out over 20, 21% is the direction it's headed in. At the current multiples, it should have $1 billion market cap. So two boxes take really from an investor point of view, an ROC of higher than 15% and $1 billion circa valuation, which in our opinion will then bring in a completely different set of investors in that business. Number two, investors like single focus businesses. Couple that with a good governance structure that we put into place. You must have seen in the Raymond Group over the last couple of years, we've really focused on governance, increasing shareholder value. So I think all of this is more important than the 600 crore number that you talk about. It's really, this will drive the business to another level. And that's what we want to achieve. And just to, if you then step back one, it all comes from the single philosophy here, which is to create shareholder value. A lot of people said that it happened so quickly with secrecy, but that's the way we are. Once we decide something, we do it very swiftly.
Yeah, that's correct. I mean, earlier this high quality business was getting subdued valuation because the overall business was housed in one company.
You're getting conglomerate discount.
Yeah, now $1 billion roughly the fair value, whereas your main company valuation was a little under $1 billion. That's why the unlocking is happening.
That's why the unlocking is happening.
Yeah.
Because the multiple will change.
Yeah.
The minute it's a focused business, you won't get the conglomerate discount and the multiple will change.
So what is the arrangement for royalty between the old co and the new lifestyle business which has been diverged?
So, it's unfortunate that when you do so many things, people focus on the one thing that might not suit people. I'm being very candid.
No, absolutely. But the reason I was asking is because the market wants to know.
So that is the subject under discussion. We've taken on board the feedback that we have got on it. There are reasons we have done it the way we have done it. Because also in the short term, till the real estate creates a proper revenue stream in the old co, I will need a revenue stream in the old co to support the debt there.
Sure.
Now, we could have waited another 2 years to do this. But I'd rather say, we are there, let's get going. You might not get 110% value, but you'll certainly get a great amount of value. So, the matter is under discussion internally. We have taken on board all the investor feedback that we have got, and we'll deal with it.
Sure, but the reason I was asking was that the market has got this issue on their mind that what percentage of overall profitability you'll retain in lifestyle, and will it be a reasonable kind of arrangement?
All the lifestyle profitability will go to lifestyle.
No, in the sense that royalty payment the lifestyle business will do to the old company.
So there are many companies where royalty payment is done for the brand, and it is capped. It's not that it's unlimited. It is already capped, which has been communicated to the market. Having said that, we have heard the feedback from the market, and I want to assure you that we will discuss it internally and take the best call in the interest of shareholders. Please understand, I'm the largest shareholder.
Yeah,
so I would be interested in the best, whatever it is. Number two, you are a minor shareholder in both companies. So if the benefit is in company X or Y, you are still getting the benefit.
So you are also in discussion with...
So I want to also clarify something, that the brand is not held personally. It is held by the company. So whether you are holder in old co or new co, you're still having the benefit in either one of your two arms.
Yeah. The feedback which we got from the market, a lot of your older shareholders are wanting to add, and that's why the run-up is because they believe that the liking of business towards new lifestyle business demerge will be higher. Are you also getting good feedback about this end of the business? Investors from institutional side are keen to...
I certainly believe that there will be a new class of investors that will come into a focused business, having met two important criteria, one on ROCE and one on minimum market size of the company. Having said that, there will be a different set of investors that would get attracted to the real estate business, because the real estate business will still be a significantly large business in the old co.
Okay. Are you in discussion with institutional shareholders who may want to know more about? Are you doing roadshows and reaching out to?
We are reaching out to shareholders has been a continuous process, and it will only intensify now once the demerger has gone through. Post the demerger announcement, I have met several shareholders personally. My team has done, I think, a couple of conference calls. And I will continue to meet investors and explain what the story is. And as a company, I want to assure my shareholders that we are here to listen. When you do things at a pace which is very fast, which you have also said we've done it very quickly, maybe some things get missed out.
Sure.
But we are open to dealing with the issues.
Well, that's a great practice, actually, feedback from both the sides. Talk to us about how your FMCG end of the business is looking right now. I understand after consolidation, there are a lot of synergies coming in, and you have plans there as well. So
the FMCG business for us is growing pretty well. It's it would be circa 20-25% growth in that business. The consolidation has played out well for us because there's significant cost savings. As a DO company, we are the largest selling DO in the country between our two brands. And really, it comes back to shareholder value creation. So if you see the FMCG, apart from what we have done on the business side, we've done a lot on the governance side. I've stepped off as chairman of that company. I'm just a board member. We have 5 independent directors, an independent chairman. And I think that's the future, the way the businesses should go.
How's the potential of this segment of the business? There are talk of analyst community see it, say 1,000 crore in the next couple of years, perhaps a listing later
I think
date.
our gross sales on the FMCG this year itself is 800 crores.
So it can easily cross 10, 11, 1,000, 1,100
Oh,
crores.
certainly. I mean, see, we are dreaming big in this now. We have put the building blocks in place, and now we're going to build on that.
There is also indication that perhaps a listing of this business also come by in the next 2 to 3 years.
The listing is the only way to create shareholder value. And if the stated policy of the group is to create shareholder value, listing will be inevitable. When it will happen, who knows? But the idea is to create value out of this business.
Let's talk about the realty end of the business. When you actually launched real estate plans, there was already a lot of inventory in that region, in the Thane region. Other players were also present. But perhaps because of the location and the brand, how's the experience been for bookings, etc. so far?
Extremely good. With God's grace, we've done well in the real estate space. 7-8 days ago, we launched the 1 BHK apartments, which have done well. But I think more importantly, the around our land, the ecosystem that will be built is something what people are looking forward to. Raymond has a brand. Raymond is conscious of that, and we're giving the right product at the right price, right location, right facilities, right brand. I think it's a good mix, and the proof of the pudding is in the eating. So eventually, if you look at the traction on sales and the sales that are booked in the balance sheet and money in the bank, that's your answer.